I want to get your thoughts on Bitcoin because to me it looks like it's breaking down big time here, and a lot of these crypto bros they like to refer to Bitcoin as digital gold or new gold.
Yeah,
And I
right.
want to get your thoughts on the price action we've seen in the last couple of months because once again it peaked out in October at call it 120,000. Now we're trading in
127, 127,000.
127. Now we're trading in this call it 70s.
Yes, yeah.
Yeah,
Okay,
what are your thoughts there?
we had been anticipating a collapse in Bitcoin months ago, and after that November, or I think it was October or November high, it started to drop, and at a price, we had two sell triggers arguing for massive collapse. These were not minor sell triggers. One was at 107, one was at 102 area, okay, 102,000. When we hit those, we dropped immediately down to the low 80,000s. Spent a couple months trying to hold there, which we'd expected as well, a midpoint pause, we called it. With not a buy, but just a pause, up and down, futile rallies. And then we broke through that 82,000 a week or so ago. And our target stated months ago was 60,000. No, excuse me, let me define that better. Our minimum target was stated as 60,000. We were saying that when Bitcoin was well above 100. Well, the low the other day was $60,005. Okay, so we hit our minimum target and we did it in a crash-like mode, actually two crash type events. Any rally right now, I think up to the 75, 76,000 zone is probably a sale. The rally will not hold. And I don't think ultimately 60,000 will hold. And Ethereum, which a lot of people thought, well, that's different from Bitcoin. We argued, nope, this little crypto beast compared to Bitcoin in terms of size of the crypto market, we said Ethereum will follow Bitcoin. And it not only followed it, but did worse on the downside. In fact, Ethereum price levels we saw low last week were basically at the lows of the last 5 years. So anybody got an Ethereum over the past decade is wiped out. Okay. I would not be surprised to see much, much lower prices. And I wouldn't even be surprised to see it become almost non-existent. Already sentiment has been crushed. For some reason, people are surprised by it. Our momentum technicals told us, nope, it's got crash potential. When we looked at a price chart of Bitcoin over the last couple of years, it was a layered advance with a pullback and then another surge and then finally that third surge. When you looked at momentum, long-term momentum, you didn't see this upside. You saw a floor. Same level, hit, hit, hit. Whereas price was ascending, momentum was building a floor, like the bridge over the River Kwai, okay? And it went through at 107 and 100, just below 102,000 back a couple months ago. And that's when the crash started. So anyway, I think the vision that it is the alternative money and a competitor to gold and silver is now been crushed. And I would not be surprised to see some financial consequences, meaning companies that weren't 5 years ago anything to do with crypto suddenly got up to their hips in crypto one way or another, and therefore they're vulnerable. Meaning you could get some headlines out of companies that you don't even correlate to crypto having problems or losses that they wouldn't have otherwise had. So anyway, I think it's a bubble burst and I don't know where it's going to go.
And so I was going to ask you that. So it's definitely going to test $60,000 again. And if it goes through 60, you have no idea where it goes. Like it
No, I
doesn't
don't
free
have
fall.
any. I really don't. There's no more targets. I think it is a busted bubble. I think it is a tulip bulb. And I don't know what's on the other side of it. I don't know that it lives if there's
So
more on the other side of it.
this is one of the big concerns to me if it does because it looks like there's liquidation going on within that sector, and I think there's 150 these Bitcoin Treasury companies, the biggest being MicroStrategy. They're sitting
Mhm.
on $80 billion worth of, or not 80, but $8 billion worth of debt that they used to buy Bitcoin. Their average price is at 78,000, and here we are trading in, 70,000, give or take.
Yeah. Off the low of last week at 60,000. Yeah. Yeah. No, it's the consequences, not just for crypto related companies, but non-crypto related, because of their acceptance of the notion that, oh, well, maybe it is viable money. Well, this event, it's not just technical, and it's not just a, quote, bear market in an existing asset. It could be sufficient to bust the notional bubble of what crypto is or was, and to the point where it's no longer considered viable.
I want to get your thoughts on oil now, WTI. And to me, it looks very constructive in spite of all the news that you see on what's going on. It feels to me like the price wants to move higher. I've gotten long some ETFs. What are your thoughts on oil here?
Yeah, I bought some oil-related ETFs a week or so ago too. Crude oil was back in the late 2020 to the 2022 explosion in commodities, which really was not an explosion. It was a doubling plus in price of the Bloomberg Commodity Index. Back then, energy was one of the leading components. But even that price surge in the Bloomberg, for example, got up to 140 at a peak. That was still a little more than half the price level it saw in 2008. So it really wasn't, off the page high for commodities. Well, oil had a big surge. It went up to 130. Okay. Then it backed off hard with the Bloomberg Commodity Index in late 22, 23, and 23 to 24 to 25, like 3 years there. It just laid in the sewer, okay? 60, 70, 80 bucks, 60, even got down in the mid 50s. During that same time, the Bloomberg Commodity Index, which is what oil tends to move with, by the way, was either side of 100. So it dropped from 140 back under 100, just dead as hell. I'm just not going lower, but I'm also not going up. Last October, we got a major momentum-based buy signal out of the Bloomberg at just above 106. Right now, we're trading like 118, 119. Okay, no big deal. It's been a quiet advance. But during that time, oil was weak over the last handful of months. Oil was the weak component. We broke out using long-term momentum metrics on crude oil, not price chart, last month's close, which was above 63 bucks. We're above there now. No big deal. Not a lot of excitement. All the fundamental guys are saying, going to 40, et cetera. They've never been more certain. And all I can say is, don't be shocked after that momentum-based breakout of crude last month, just above 63, that it goes up about 50%, meaning up into the mid-90s. Again, which is no big deal, given that we were 130 in March of 2022. Okay, so it's not even halfway back to that high, but that's a 50% increase just in the first surge post that breakout. And I kind of think that could occur in the next quarter or so. And I don't think it needs a headline to do it. I think it's simply a factor of absolute cheapness of oil relative to its own history, relative to other assets. And it's even pointed out that silver or oil is the lowest it's ever been in relation to silver, partly due to oil's weakness and silver's strength. But no matter how you want to measure oil, it's off the page dirt cheap. Now, there's an underlying reality in the pricing of all assets, and that is the degradation of the money unit that we use to measure them by. And if the money supply increases like 80 to 90% every decade, which it does, especially now, that is, in the long run, ultimately reflected in assets, bloating the price of the assets, simply because the real buying power of the money is degrading. Well, oil hasn't reflected that. If oil were to reflect that, it'd probably be back at the mid-hundreds or something, But anyway, I think oil's turned. And I think that you could get some drama, and I don't even think you need a headline. It's just a pricing issue.
Interesting comments. And I always like to look at stocks because I think quite often stocks lead, and many of them are very strong in spite of the fact that oil is so cheap.
Oh, yeah.
A couple of other commodities I want to ask you about because they've also showing strength, and the first one being lithium. And just to provide a little bit of context, it peaked in 2022 at $80,000 a ton. It bottomed at $9,000 a ton in 2025.
Yeah,
Now it's
yeah.
trading around $20,000 a ton. And do you have any thoughts on lithium? A
No,
lot
I
of the
don't.
stocks have had big moves
I
too.
examine the commodity markets, the essential commodities, but that is, I don't include that in our monthly commodity report. We include platinum and palladium, but not lithium. My son does cover stocks that are related to metals, such as rare earth, ETFs, copper related uh, corporate companies that are related to the copper and lithium. And I forgot, I don't know what he just said about it. He put out a report just recently. I know it was positive. I think he got bullish some months ago, and I can't offer any specifics, but we do cover it. He covers at least the stock. There's an ETF related to lithium. So,
And what about uranium? It's also showing some
yeah,
very positive action.
we've called it very well back when it was under 20 bucks, back when it was at 2017, 18. We said bull market starting because annual momentum, not price, of uranium 308, very illiquid futures contract, by the way, in Chicago, broke out and said, I'm in a bull trend. And it moved up through 20 and ultimately went over 100. Uh, 2 Augusts ago, we said there's a correction coming. I think it was 24, maybe it was 25. And sure enough, it was in the mid 80s then, and we thought it might collapse down to about 70, give or take, and it actually got down in the 60s. But our assessment of uranium is while it is reasserted itself back into a full bull trend, I don't know about the dynamics of it. Meaning, yes, up, but I don't know that it's, quote, the place to be in terms of multiple gains. I think there's better places to be. Probably oil related would be better than uranium now. Not that uranium's going down, just that it had a monster rebirth from under 20 to, now we're trading what, this upper 70s or 80s. So even after the recent highs, we're still at very high levels versus the lows. So I don't have a confident sense that uranium upside will be one of the better places to be.
Good insights. So you touched on copper. Should we also have a discussion on that? What are your thoughts on copper?
Yeah, copper, I'm not sure where it's going, but 7 or 8 or 9 bucks wouldn't surprise me whatsoever. Uh, it's the base metal miners are acting very good because it's not just copper. So they're a good place to be. And broadly speaking, we made this point a few months ago with the Bloomberg turning up. And by the way, the commodities don't always follow gold. Like between 2015 and 20, well, gold doubled from 1,050 to over 2,000. The Bloomberg kept going down, not collapsing, but just kept going down while gold was doubling. But then in 2020, after gold had already made its last peak at 2,000 and still was stuck, Bloomberg doubled plus. No correlation to gold. But now it looks like Bloomberg is now latching onto the tail of gold and is going to be coincident with what's further in gold. The commodities are going to join it. And when we do our long-term trend analysis of the Bloomberg Commodity Index, and most of its components tend to behave with it, by the way. Some will lead it, some will lag it, but they all tend to be a pretty good little crowd. They tend to stay with it. I think over the next couple of years, being in commodity-related stocks, oil-related, base metal-related, agriculture-related, fertilizer companies, things like that, will be a great place to be. Because I think, one, it's very low risk. Prices have been mashed off the page in terms of their relationship to the decaying money unit, in relationship to the stock market, in relationship to gold. Very depressed, risk is low, and I think the upside is good potential, but not a trade. I'm talking investment quality, something that can last several years at least. I think it's a good category to be looking at.
Right. So your message to investors is you see that wave coming, you got to jump on that wave and just ride it.
Yeah, don't wait for the Bloomberg to explode, okay? And take out, for example, the price high it made in 2022 at 140. Yeah, everybody will wake up then and say, oh, it took out the last high. Our momentum and even price analysis lag to momentum. Price is usually sort of laggard to its own momentum. Say thumbs up. And no, it's not explosive yet. No, there's not any headlines. But the primary thing is it's dirt cheap historically, even to its own price history. It's dirt cheap in relation to other assets. And sometimes, even though the Fed keeps printing, it doesn't always go where they want it to go. We know this in bear markets in the stock market. They may print like crazy, but the stock bears continue and the money goes elsewhere. And I think this is one of the categories where it's going to go because of the risk reward potential.
Yeah, and you raise a good point about money printing because I always like to throw out this stat, but just to give investors a better sense of what's happening, because we all know what's going on with inflation
Yeah.
and loss of purchasing power,
Hmm.
and it's measured by M2 in the
Hmm.
U.S. In January of 2020, it was $15.4 trillion. Here we are 5 years later, going into the sixth year, it's well over 22 trillion. That's an increase of 42%. And another way of looking at that is just the loss of purchasing power. Our dollars are
Right.
worth less.
Hmm. Yeah. Yeah. And every decade it's like 80%. And given what's going on with the government bond markets, Japan, here, UK, et cetera, you got, it's not like mortgages. You've got the key platform asset category that people have always trusted. Now, it may not yield that much, but boy, it's safe. If all of a sudden the perception is no, it's no longer safe, then what are you left with? It's far bigger than the stock market. So that's why the Fed started jumping in last November, mid-November. President Williams of the New York Fed said we could start buying bonds. His reason was, oh, to provide liquidity. Nice excuse. Just need to provide some liquidity for that market, not support it. Well, look at what happened to bonds and T-bond futures since then. The price was 117. We dropped down in the 115 area. And if you look at the last like 9 weeks, it's like comatose. Never in the history of T-bond futures prices or yields at high levels narrow, very high levels, not backing off, price not rallying. Have I seen such confined, abnormal activity where, yeah, it looks like they're keeping it from collapsing, but they can't get a rally going. Even when we get weakness in the stock market, it tries to rally and can't get going. So no wonder, was it Morgan Stanley, I think, or yeah, that said, okay, we need a new portfolio orthodoxy. Instead of 60-40, it should be 60 stocks, 20 bonds, and 20 gold. Huge admission. I mean, they're admitting something's wrong with the government bond market. That's a crisis waiting, and when that crisis is already causing them to print. So that's
That's
going to
right.
go. Yeah,
That was Mike Wilson, the chief investment officer at Morgan Stanley. So
yeah.
very interesting call. So I want to ask you about something else just because we're talking about bonds. Bloomberg recently reported that it's been the first time, I think, since the 1990s where gold reserves have overtaken U.S. Treasury reserves. What are your thoughts on that?
I don't have no fundamental thought on that. No, we look at things technically, and
But
yes,
but it really speaks to your point about people are selling bonds
yeah, yeah.
and then they're buying
And
gold. So
foreign governments are, and also when the public begins to doubt it, and anybody who's intelligent and looks over across the oceans at Japan and realizes that their bond market is in total jeopardy. In fact, the new prime minister, who got boosted by this recent election over there as well, one of her phrases, we're going to print, print, print. Oh, lovely. Well, maybe that'll save your bonds or maybe it won't. But also, it's not just Japan, it's us. The only difference is we're not in that crisis mode yet. And that's probably why the Fed came in November onward to provide, quote, liquidity for their piece of paper. Because if there's any doubt that ever hits that market, you talk about psychological wipeout and emotion. That's bigger than anything. You can't have that even approach the edge. And our technicals say they better keep buying because right now, either side of 114 for the last couple months, 3 months now almost, you better not drop about 2 to 3 points from here, like down into the 112s. on the T-bond futures price, meaning yield crowd up toward the highs again. Because if you do, you're likely to puke. We've got technical reason to think that not only could it drop, but it could create a panic. And that's the kind of event that they can't afford to happen. Because then we enter the Japan club.
Well, if that does happen, I mean, the price of gold is just going to explode. It could reach your $8,000.
Gold already knows this. I think gold already knows this. It's known it. That's part of why it's been going up for a decade. It knew this. Jamie Dimon said months ago, you can't keep playing this game forever, pushing this debt problem off and off. Pretty soon, you're actually going to have to confront it. And the problem is it's not being confronted. Even Trump isn't. The debt is still, well, anyway, you get the point. We're dealing now with not just a mortgage problem or a dot-com bubble. We're dealing with a government bond bubble. Japan, here, UK, elsewhere in the West. And once that gets into doubt, even the least bit of doubt, that's a crisis in itself.
Well, that's, as always, Michael, this has been an interesting discussion. I want to thank you very much for spending time with us today. And I guess your message that you really want to convey to investors is that get long gold and get long silver.
And they're miners. My preference right now, personal investments are, I favor silver over gold vastly, despite the recent drop. And I favor the gold and silver miners over gold as well. They have not broken out yet versus gold. They have firmed nicely over the last couple of years. The miners have beat gold, but they've been still stuck in a range of performance readings that they've been in for 11 years at very, very low valuation levels. They're challenging the upper end of that range. If they break out, you're going to get a gusher in the miners. And I suspect we're going to see it this year.